Hi, Peter Rose, Longwood Currency Trading, and today's video is on what makes a good trade. You shouldn't be experiencing stress. Trading should be fun, and it's only fun if money takes a second seat to the joy of trading itself and for what you're accomplishing. Well, what are you accomplishing? You're providing liquidity in a market that's it's essential to the world commerce in the FOREX market anyway. There's $6.6 trillion of daily orders or order flow that is in the FOREX market, and you're participating in that and you're providing liquidity. So your $2,000 order or $20,000 or whatever it is, your $100,000 order is shit dust in comparison to anything else that's going on in these markets. And we bear that in mind, and yet still, without you and all the other traders that there are in these markets, there would be no FOREX market, there would be no commerce, there would be no reason to trade. And so we have to look at ourselves as important pieces in the global economy, because that's what we're participating in. The fact that we're not actually creating anything or buying anything or selling anything is immaterial, because that's not the purpose of the FOREX market. The FOREX market facilitates other people conducting their business. Without our intermediate market, the guy in Germany is not going to be able to purchase parts that he needs for his car factory from Italy, maybe. I don't know whether they do that or not, or whatever. But you know, you get the drift of that if you understand the economics of this market, the currency markets that we're trading in. So a good trade is only achieved when you feel good about what you're doing. And it isn't the participating in the global economy. It's not what it is, it's what it isn't. If you're just out there shooting shit against the wall, then you can't feel good about any trade that you make. All you're doing is you got your finger on the button and you're pulling the trigger, and you make money or you lose money. And when you lose money, it's a bad trade, and when you make money, it's a good trade. That's how you define it, and that's bullshit. I don't see how you could possibly be successful as even a stock trader or an options trader or commodities trader if you felt that way, because at some point you lose sight of yourself as a person and your function on the planet. I hate to get philosophical on you, but look, I spent 50 years in the martial arts, and I'm successful because of that training, because of that discipline, because of that understanding of what life is all about, and working within the boundaries of our lives. You know, I'm working on the backside of the boundary of life itself. I'm 71. So what am I going to do? I've got, you know, 10 years, 20 years, 30 years, maybe to go. So when you get to my age, you don't want to look back on your life and say, boy, I really fucked that up. I wish I should have, maybe I could. Nah. You don't want to live your life in the past. So why live your trading that way? It's a good trade. Sometimes good trades don't work out. They don't make money. But if you had the right intent in going into that trade, if you used proper risk management, if you thought the fucking thing through before you pulled the button, it's a good trade. But if you're just out there, oh, the short MA crossed the long MA and some dumbass told me that's when I should put the trade in. No, that's not trading. You know, that's mimicking what somebody told you to do, and that might not make any sense at all. So you have to be careful about how you're viewing what you do when you sit down at the trading desk to make decisions. Are you making decisions? Are you undertaking a logical and progressive series of investigative questions about the current state of the market, the past state of the market, where the probabilistic ratios are for where it could be. You can't just sit down and say, well, that looks pretty fucking good, I think I'll get in on that. I can't do that. I can't do that. That's not a good trade. And when you get done at the end of the day, how's that going to make you feel good as a person? You know, the better you feel as a person, the better the trader you'll be, because it all fits into the fabric of your life and how you conduct your life, in a, as the Buddhist would say, in a right living, right thinking manner. Man, it's just so important that you look at this stuff rationally and progressively. So look, that's what a good trade is. How do you make a good trade? Well, you know, we've talked about, we're not talking, you're listening. About the thought process that goes in when you sit down at the trading desk as to the fact that you're looking at what happened in the past, you're looking at what currently is happening. Does that have any relationship to what happened in the past? What's the order flow looking like? How comfortable do you feel about the rules that you have to deal with the market conditions the way that they are? Maybe it's non-farm payroll that you're trading, so you need a different set of rules or whatever in order to trade the volatility that exists there. You have to think about all these things, and that's how you make a good trade, by simply being conscious of the background and the experience that you have, of the technical rules or trading processes that are part of your trading plan, that you have confidence that those are well constructed, and your ability to not get wrapped up in relying all on your intuition, but trading intuitively and then verifying before you pull the trigger through your technical and theoretical experience and the information that's provided for you at that particular time, as to whether that intuitive moment that you're having is valid right now. Intuition plays an important part in gut feel, as I've talked about before. Plays an important part in our trading. All those things come from our experience and the information that we have. But the thing about intuitive stuff is it doesn't tell you when to do something. It only indicates the possibility that an opportunity may be there. You need to rely on that information base and your experience in order to tell you when to do it. And you need to have your rules in place in order to understand how you do it. What, when, where, why. All those questions that you were taught in grade school as to how to formulate, not formulate, but how to formulate a letter or a paragraph or a book that you're writing is implicit in how you need to be structuring your how process for initiating a trade to make it a good trade. So what's a good trade? All right, we covered that. And how do you make a good trade? How do you ensure yourself that it's going to be a good trade? Well, by relying on the first part as to what that good trade should look like. I mean, you know, if you're playing a game of chess or a game of poker or backgammon or whatever, you know whether you played sloppy or whether you really focused on the game. It doesn't mean you have to be dead serious about what you're doing. You can always look at things from a light, happy standpoint. The seriousness comes from in the way that you implement the decisions that you make. You can have a great time around the backgammon board, having a glass of wine, throwing a slice of cheese at your partner or something, and trash talking your way through. But when it comes time to move your checker after the dice are thrown, it's dead serious. You can have a lot of fun talking about your trading, what a good trade is and all that other stuff. But when it comes time, right before you push that button, you better be really, 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 really clear on what you're doing and have full justification for that. Because if the trade doesn't work out, that doesn't make it a bad trade. It's only a bad trade when you do stupid shit. So, Peter Rose's rule for the day in currency trading: don't do stupid shit. Peter Rose, Longwood Currency Trading. Have a great day and have a great trading day.